Hi, welcome to this video today, which is all about Forex, stop losses and money management. Now, in terms of today's video, it's all about moving stops to break even or to entry. And beginners in particular normally are very impulsive. They want to get that stop to entry as quickly as possible. They're basically thinking, well, now I can't take a loss. Yeah, all I can get is a profit or I don't lose anything. However, that logic is fatally flawed. Now, in terms of moving stops to entry or to break even, yes, you can do it. But you've got to know when to do it, okay? And it's very important. Traders do not understand what is called prospect theory. Once you understand prospect theory, then you'll understand why you should not move your stop to break even or entry too quickly. So what we're going to do is we're going to go through some points in relation to when you can move your stop up to break even and why most of the time it just simply is not a good idea. I've listed the points out on a storyboard. Let's go and take a look at them. We're on the AUD-USD chart. I'm just going to illustrate how to move a stop correctly in a moment with the trade that I'm actually in. But in terms of you move your stop too quickly to break even, you can't lose on the trade, as we've said. But of course, it could become a really good move to the upside, and you need to cover your losing trades with big winners now, or bigger winners. Now, in terms of one thing to understand about why traders are so keen to get their stop to break even or entry is to understand what's called loss aversion. Now, as humans, we're naturally risk averse. We hate losing. We dislike it even more than winning by double. Okay, and this has been proved psychologically. I'll just give you a quick example. You flip a coin and I tell you you're going to lose $10 if it lands one side. How much do you want to win to take the bet? On the other side of the coin, you're not going to say $10, are you? You're probably going to say 20. Certainly going to be more than 10. Okay. Now this loss aversion that we have naturally within us, psychologically, it's been proved by Nobel Prize winner Daniel Kahneman in his book Thinking Fast, Thinking Slow, which any Forex trader should read. It's called prospect theory. You look up prospect theory on the net, but just keep in mind that losing, you dislike it much more than winning. That's why you want, or many traders want, to get that stop to entry or break even as quickly as possible. But very often they're just going to put it in the noise, get taken out of the trade, and they've restricted their profit potential because they're not running their big winners. Now, point number 2 is very true. A large percentage of losing trades has no impact on a strategy's profit potential longer term. It doesn't. Yeah, the percentage of losing trades you have is pretty irrelevant. It's just how big your winners are over your losers. And that comes from Bill Eckhart, a very famous trader who taught the turtle traders to trade. And he taught them a strategy which had a losing ratio of trades of 75%. But they were taught to hold their stops back and really run the winning trades, okay? And they made a lot of money, compounding 100, 200% per annum. So, losing doesn't matter. You are going to lose. As long as those winners are bigger than the losers, that's fine. Also, point number 3, you've got to keep this in mind. If you're moving a stop to break even quickly, are you confident in your strategy? No, probably not. Because if you're just moving your stop to break even, you're obviously not that confident of the trade continuing. So you'd be better off to just take the trade out at market and go flat. Because then you'll have some profit, wouldn't you? I think a lot of traders just don't have confidence in their strategy's edge. If you don't know what the edge of your strategy is, you haven't got one, okay? So you need to research an edge, okay? That will then give you the confidence to stay with the trade and, again, not bump the stop up to break even too quickly. Moving stops, to break even is psychologically comfortable. Go back to Bill Eckhart. He's told the turtles, if it feels comfortable, don't do it. Forex trading is uncomfortable. It's uncomfortable in terms of trade entries, moving stops. It's not a comfortable profession. If you want a comfortable profession, you don't do Forex trading. You have to do the uncomfortable, okay, which most traders won't do. So the key to success is size of winners over losers. Now, In terms of the trade I'm going to show you now, many traders would move the stop to entry already. So let me just illustrate it. I've seen this 70 level here, and it's a big level. We've come up, poked through the level. I'm going to come in off the level. I'm bearish of the Aussie, and I'm going to come in at 69.50. And we're at 68.69. Okay, so I've got not far off 100 pips. Now, should I move my stop to break even? The answer is no. Why? Because 100 pips in Forex trading, any currency can move that. It's just noise. So if I move my stop to break even, it's not a smart idea, because on the other side, I need trades, and most traders do, 200-300 pips or more. If you're risking 100 or more pips, is obviously going to mean you need 200-300 at least. I want 500 if I can get them. And my hit rate is about 48% in terms of winners. So I'm losing over half my trades. So there's no point in banking. What I need to do is the first level of resistance, which is there, in my view, is roughly in line with my entry. So I need to be one level back outside of the noise. So I have to keep my stop at 70.30, or I'm keeping my stop at 70.30. So you could say, well, you're going to lose back quite a bit of profit if your stop is hit. It doesn't matter, because I'm trading probabilities. I know if I keep doing this repetitively, I will get those 200, 300, 500 trades, pip trades on the other side. So I'm happy to do it. I've got confidence in the edge of my strategy. So could I move to my stop to break even, and when would I do it? Well, let's look at it this way. There's the support level, okay? If we were to come down through this level, say to really clear of the round number at away from 69, let's say 68.30, well clear of that support line, I can bring my stop to break even or near break even, because that will then be first level resistance, that will then be second level resistance. So I can do it. But I've always got to stay outside of the market noise, and a lot of traders don't see the market noise, and they never make any money. 100 pip move in a currency pair can happen on any day for any reason. It might just be noise. You've got to use sensible stops and trail them second level back. So if we break decisively lower, you could go to break even or near break even. That would be fine, but not where prices are sitting at the moment. And everyone's strategy is slightly different, but that is a good illustration of not moving your stop to break even too quickly. So that is the video for today. Thank you very much for watching me. Take care. Have a good day.